Today, I'm going to show you the best and the easiest way to make money in crypto right now. Notice these words, best and easiest. I'll break down exactly what the money flows are telling us, show you the macro signals moving billions behind the scenes, and walk you through the events that could trigger the next major move in crypto this week. So while crypto Twitter, YouTube, and even some of your friends at the gym are all convinced that the real money is hunting for the next 10x altcoin gem, so far this year, chasing altcoin hype has been a one-way ticket to Wreck City. That's exactly why you haven't seen me going hard on those degen altcoin picks since the beginning of the year. Don't get me wrong, there will be a time for risky bets. And when there is, believe me, we'll bring it to you. But here's where I stand right now. I don't go all in at a poker table when I'm holding a weak hand. We've got all the cards. The biggest wins come when you wait for the right cards and strike when the odds are stacked in your favor. Playing every hand just to stay busy, that's how you lose your stack and go broke. If you want to actually make money in this market, you have to learn to read the room, to see where the money's flowing, and understand the big picture macro landscape that's driving everything. Look, when the time comes, I'll be the first one loading up on these explosive altcoins and riding the next big wave. You can bet on that. But if you want to win right now, I'll show you exactly what I'm looking at to stay one step ahead. So guys, stick around because by the end of this show, you'll know exactly why being early and betting on strength is how you come out on top in a market like this. All right, let's set the scene because what's happening at the top of the financial system right now is the real driver behind every crypto chart you're watching. Last week, the 10-year US Treasury yield ripped right back above 4.5%. These are levels we haven't seen since the dark days of the global financial crisis. And what that really means? Liquidity is tight. The cost of money is going up. Anytime you see yield surge like this, you can bet that every risk asset, stocks, crypto, real estate, starts to feel the pressure. But let's dig a little deeper. This year alone, the US Treasury is on the hook to issue over $10 trillion in new debt. 10 trillion just to keep the machine running. That's a tidal wave of new bonds hitting the market. And it has global investors scrambling. Where do you park cash when the whole world's awash in debt and uncertainty? Well, you look for yield and you look for safety. And while the US prints and spends, China is quietly stacking gold for 7 straight months. That's what de-dollarization looks like in real time. They are telling the whole world the era of the dollar's unchallenged dominance isn't as bulletproof as it used to be. But here's the real paradox, and I want you to see this chart for yourself. Even with all the new debt supply, US Treasuries are still on pace to pull in a massive $163 billion in net inflows this year. That's the third largest haul in history. So what does that tell you? When things get scary, global capital still floods into the safest, deepest, and most liquid markets. It's the same playbook, whether you're running a sovereign wealth fund or just protecting your own portfolio. When liquidity dries up, you bet on the leaders first. You crowd into what works. Everything else can wait. This is why, right now, the strongest hands and the smartest money are rotating back into strength. First treasuries, then Bitcoin, then maybe down the road, everything else. But policy winds are shifting too. The next move on the chessboard, it's coming from Washington, and you need to be watching. While most people are glued to the charts, the real winds of change are blowing out of Washington and Austin this week. We just saw something that would have sounded like pure science fiction a few years ago. Congressman Tim Burchett, a sitting member of Congress, is pushing for the US to hold Bitcoin on its balance sheet. So what's the difference between Senator Lummis's Bitcoin Strategic Reserve bill and Tim Burchett's bill? Well, his bill is a one-pager. It does just one thing, but this one thing is very important. It locks President Trump's Strategic Reserve Executive Order into statutory law, so no future White House can scrap it without Congress. It does not compel new Bitcoin purchases, audits, or funding streams. It's the legislative seat belt that keeps the existing stash off the auction block. By contrast, Senator Lummis's Bitcoin Act lays out a 5-year plan to buy 1 million Bitcoin, and it mandates quarterly on-chain proof of reserve audits and even redesigns custody with a nationwide cold storage vault network. In short, Bruchette's buckles in what is already here, and Lummis's drafts the full flight plan for how big, how fast, and how transparently America should stack sats. Not only that, in Texas, lawmakers have voted on a bill that would make Bitcoin an official part of the state treasury. Right now, that's just waiting to be signed into law by their governor, Greg Abbott, a longtime Bitcoiner. He's been supporting crypto innovation for years, taking Bitcoin donations since 2014. Very smart guy. And even calling Texas the crypto capital. That's why I moved here. Once this bill hits his desk, there's every chance in the world he's going to sign it. It's good for his own bags. And that's the beautiful part about Bitcoin, is once people buy in and get orange pilled, they want everyone else to buy in after them, right? And that's why everyone becomes such evangelists, because they buy in, they buy Bitcoin, and then they go tell you to buy Bitcoin, so you pump their bags. It's a beautiful thing about it. This is why we have so many evangelists. And you want a signal? There it is. For politicians, holding Bitcoin is turning into a flex, a statement about leadership and sovereignty. But here's what most people don't see. The Bitcoin in government conversations is actually way further along than anyone realizes. This week, Bo Hines jumped on the Wolf of Wall Street's podcast, and you could just tell there's real movement happening behind the scenes. I saw this at Bitcoin 2025 in Vegas as well. He didn't spill all the details, but the vibe, let's just say the doors to DC are cracking open wider than anything you'll read on crypto Twitter. Check out this exclusive snippet from Bo Hines.
We talked about this in different verticals, whether it be like through mining activity, whether it be through bit bonds. I mean, there's tons of creative things we can do.
Collect taxes in Bitcoin.
Yeah, I mean, it's endless. And so people ask me to give like clear examples. And the reason I don't want to tell you what we're going to do first yet is because I really don't want to poison the well. We want to do something that's going to be the most effective for the United States. And so when we're ready to announce that, which I'm sure we will be in short order, I think that this community will be extremely pleased.
Not only that, too, he goes on to say that, it's obvious that the United States wants to hold as much Bitcoin as it possibly can. And, I was just running this experiment the other day on ChatGPT, also seeing what it would take. And maybe I'll make a video on this. Let me know in the comments below. There's another bill proposed somewhere. I forget which congressman did this, but it was called bit bonds. And I was just playing around with ChatGPT the other day and wondering what would happen if America were to just, let's say, print $1, $2, or $5 trillion to buy Bitcoin. What kind of effect that would have? And then I worked with ChatGPT and said, if you were building policy for the United States and you wanted to propose a bill, how would you do it? And it's really fascinating. Guys, let me know in the comments. I do read all the comments. Let me know in the comments below if you would like a video on that. It's more just like kind of theoretical and builds a hypothesis, but it's fun. I haven't finished yet, but if I see enough people who want to see that video, let me know. I will do something like that. So you can clearly see the momentum building. There's urgency now and a new level of seriousness at the very top when it comes to Bitcoin. This is how a historic shift starts, gradually, then all at once. But that's not the only thing shaking up markets right now. This week, we've got a critical CPI print coming up, a single number that can swing billions in minutes. And there's a string of massive Treasury auctions queued up. Every trader on Wall Street is watching those bid to cover ratios. A bid to cover ratio measures the demand for government bonds during an auction. It's calculated by dividing the total amount of bids received by the amounts being offered for sale. For example, if the government auctions $10 billion in bonds and receives $25 billion in bids, the bid to cover ratio is 2.5. A higher ratio means strong demand, more buyers than available bonds, while a lower ratio signals weaker demand. It's a quick way to gauge investors' appetite for new government debt. When the stakes are this high, it's not just price action that moves the markets. It's the narratives, the surprises, and the headlines that hit when nobody's expecting them. So keep your eyes on DC, one eye with the economic calendar, and both ears open for narrative shifts, because these moments can flip the script overnight. But here's the real question. With all this talk about Bitcoin and the halls of power, who's out there buying? And how much of the real move has already happened? Let me show you something that might surprise you. Let's pull back the curtain for a second, because the real demand behind Bitcoin this cycle isn't just from the usual suspects. I mean, retail is actually nowhere to be found for the most part. Over the last 18 months, both nation states and public companies have been quietly stacking Bitcoin. You guys know if you're watching the channel, but most people have no idea. We're talking billions or hundreds of billions in long-term cold storage. This is institutional grade accumulation, and it's become the largest driver of demand in the market. These moves are taking the world by storm, making global headlines everywhere. Look at just what happened in Japan with MetaPlanet. They copied Saylor's MicroStrategy playbook. They went all in on Bitcoin reserves and overnight became the most traded stock in the country. David Bailey, the chairman of the Bitcoin magazine and the Bitcoin conference, put $1 million investment in a MetaPlanet and watched it explode up to $35 million in a single day. And get this, he's already up $150 million overall. That's a 150x return for betting on strength and being early. You might think everything we've shown so far is a coincidence or luck, but every data point says the same thing. Betting on strength works. That's the point of this video. And that's exactly why people like Saylor continue with their relentless bid. Strategy just added another 1,045 Bitcoin to their stack, and now they're holding 582,900 and something Bitcoin. This is textbook. Bet on strength. Institutions are still accumulating, even at new highs. Even companies that went all in on Bitcoin reserves are the only names getting rewarded in this environment. That's the game right now. If you want to win, this is the most obvious play. Here's a snapshot of every major public company holding Bitcoin on their balance sheet. Not just public company, but private companies and governments. Let's just take a moment to appreciate this. As we come down here, guys, we can see these are lists of corporations and government entities who hold Bitcoin either directly or through custodians. Let's just go through this and just slowly scroll and appreciate all of these publicly traded companies in different countries like United States, Canada, Japan. What is this? China. More Japan. Was this Malaysia, I think, over here, or Indonesia? And then we've got El Salvador, Mercado Libre. Oh, that's so interesting. Mercado Libre, I just found out because I was looking for these awesome hats anyway. It's like their eBay of Latin America. I just found that out yesterday, actually. Just browsing my normal Sunday looking for really cool hats. I'll show you guys them soon enough. You got Brazil over here. You've got Germany. I don't know what this flag is. Let me know in the comments below if you guys know what this flag is right here. Japan. All these different companies. And then we go down here. Look, it just keeps going on and on. I mean, I've never mentioned 80% of these on this channel before, but it's mind-boggling to see how many we only think about really like Saylor. We only think about companies like Tesla, Mara Holdings, these other guys. But what about all of these, that are holding it? Now you got private companies holding Bitcoin, and these are tons and tons of Bitcoin, 164,000, 100,000, 10,000, on and on and on. Now we got governments. Even here, we got North Korea. They've stole all this Bitcoin, but hey, so did the United States this is mostly Ross's Bitcoin, or was his, but confiscated anyway. At least he's free. And did you guys see that someone donated him 300 and something Bitcoin last week? Mind-blowing. Wow. I mean, that was crazy. But anyway, guys, you can see this. I just want to show you this because it's absolutely staggering. If you want to check it out on your own, go to bitcointreasuries.net and you can go see for yourself just how impressive this is. So here's my bet. Each country likely will have their own version of strategy or MetaPlanet. If you want to find the next big winning trade, get off Deck Screener and keep an eye on this website because you might see something pop up and be able to do something like David Bailey did. Now, a lot of people think retail has already piled in just because you're seeing a lot more crypto ads on TV. But the data says otherwise. Google searches for Bitcoin are near cycle lows. So even though crypto ads are everywhere, most of retail crowd is fighting the trend, not following it. The smart money is already positioning for the next move up. But speaking of crypto ads, Coinbase just dropped a brand new national Bitcoin commercial, and it's one of the best ones I've ever seen. Let's check it out.
In 2012, you'd need 30,000 Bitcoin to buy this house. A decade later, it had only cost you 20 Bitcoin. And today, it could be yours for 5. If home prices keep falling in Bitcoin, why do they keep rising in dollars?
Brilliant. Brilliant commercial. Very well done, Coinbase. Very well done. If you're seeing a lot more of these, it's a sign. Main Street is only starting to wake up a little bit. Institutions got the jump. Retail's still lagging behind. Let me show you what's under the hood. So guys, if we pull up this Bitcoin season index chart, you'll see we're still deep in Bitcoin season. Look at this blue line right here, and you can see that we are still far below it. Bitcoin is outpacing altcoins. Historically, these are the times when most altcoins get crushed, while retail's patience gets tested. But this is also when the sharpest investors start researching the next altcoin gems, because inevitably, retail will come back and money will rotate into alts. And people are preparing their shopping list right now. That's why you've seen me focus almost entirely on Bitcoin and majors lately. I'd rather keep us all in a safer positions until I see real risk appetite returning, and it's a safer bet on big alts. But I want to hear from you guys. Are you itching to see more altcoin picks and deep dives, even in this environment? Drop a comment below, guys, if you want me to start hunting early opportunities or cover projects flying under the radar. I read all the comments, and if enough of you want, I'll shine a spotlight there too. And I think I'm gonna make a video on ETH tomorrow because I have a little bit of dry powder left, and I'm thinking about deploying it in ETH because I think it's very close. And that, as you know, leads altcoin season. But for now, my job is to keep you on the right side of big money flows and to make sure you don't get shaken out before the real move starts. And I'm okay waiting a little bit. I tell you, I'd rather miss the first 50% pump than being too early and seeing Bitcoin dominance continue to grow and alts continue to get smashed. And I'd rather be a little late to altcoin season than too early because we just don't know yet. This is completely new territory for the crypto industry, completely new, something I've never seen before. I've never seen anything like this. It's absolutely mind-boggling. Now let's talk about leverage, because this is the second signal I'm watching before we see the next major leg up. And let me go over here and pull up the heat map from Velo. So as you guys can see over here, it's mostly green across the board. This just means when you see all orange or red, you have to be careful because it's highly leveraged, and likely we need to see a flush before we see the next leg up. But this is exactly what I want to see to kind of give us confluence across other indicators as well that we're likely to see the next leg up. And every time I see this kind of reset, I know the market is preparing for something big. And if you've been watching this show over the last few weeks, congratulations and welcome. And if you're not subscribed, I suggest that you do that. But you should already know what direction the major move will be. The golden cross pullback we've talked about has played out exactly as expected. We nailed the dip, and now the setup is in place for the next move up. If you saw that, we said there'd be a 10% correction. There was before this major move up. And that's where I think we are right now. Exciting times to be alive. And if you want to know where the next surge comes from, don't watch the headlines. Watch the money moving on chain. That's what we're diving into next. So let's zero in on the single biggest source of fresh liquidity for this entire market, stablecoins. Check out this chart from 2019. The total supply of stablecoins has absolutely exploded. And now we're looking at projected 38% annual growth rates all the way to 2030. Look at this. It's just absolutely nuts. We're talking massive numbers here. By 2030, stablecoins could hit over $1.4 trillion in circulating supply, closing in on 1% of the entire global M2 money supply. That's 1% of all money in the world. This week, the total supply of stablecoins just broke through $250 billion, $250 billion, for the first time in history. Just look at the chart that I just showed you. Every single time we've seen a major Bitcoin bull cycle, 2019, 2020, 23, it's been front run by a flood of new stablecoins onto exchanges, in a DeFi and across protocols. But what's wild right now is the race between companies for control of these digital dollars. Circle, the team behind USDC, just went public with a nearly $25 billion valuation. Since the market's open today, it's up another 25%, trading just shy of $140 when it went public at 31 bucks. Amazing. That's right. This is a crypto native company ringing the bell at the New York Stock Exchange, being welcomed by the same suits that called Bitcoin a fad 5 years ago. But here's what I find interesting. Circle's cross-chain bridge volume just jumped 220% year over year. This is how the world's biggest trading desks are moving dollars across blockchains and at institutional speed. Now, look at their main competitor, Tether. Tether is flexing with a $13 billion in net profits. Most of it is just from parking reserves in US Treasuries. If Tether were to go public, they'd instantly be the 19th largest company on the planet, bigger than Coca-Cola. It's unbelievable. The CEO says no plans for an IPO. If I was them, I wouldn't go public either. Why would you? The numbers speak for themselves. Tether's grip on global liquidity is one of the biggest unspoken stories in finance. And the next wave? It's mainstream giants sniffing around the stablecoin rails. Uber. Uber is reportedly in the study phase for paying drivers with stablecoins. Imagine instant, borderless payouts in any country. I hope my new landlords, I'm going to rent a place, will take stablecoins or Bitcoin, please. Apple and even Elon's X have said to be eyeing stablecoins for seamless payments and global settlements. If even one of these giants pulls a trigger, you'll see capital flood into the system faster than any ETF announcement ever could. And here's why stablecoin growth is so bullish. Stablecoin supply is basically the crypto version of M2 money supply. When it grows, it means fresh capital is coming into the system, ready to be deployed. Think about it. If a government or an institution or an ultra high net worth individual wants to buy, let's say, $250 million in crypto, what do? They can't just wire it to a Binance or Coinbase. So they send it into a stablecoin issuer, like a Circle or Tether. The issuer receives the $250 million in filthy fiat and mints $250 million in USDC or USDT. Now that capital is officially on the crypto rails, ready to deploy into our precious bags. Sure, that money doesn't always hit Bitcoin or the volatile stuff right away, but almost every single time, the intent is the same. It's sitting there, ready to move into Bitcoin, ETH, altcoins, or even just to earn yield in DeFi. But it's new money leaving the analog world, coming into the digital world. So when you see stablecoin supply expanding, what you're really seeing is dry powder stacking up for the next major move in crypto. Historically, every time we've seen stablecoin supply ramp up, it's been mega bullish for the whole space. It's new fuel for the next leg up. Bottom line, if you want to know where the action is going, watch the stablecoins. It's the first clue that the market's gearing up for something really big. All right, so what are the actual catalysts on the calendar this week? That's what we're breaking into next. Let's zoom all the way out, because this is one of those weeks where a single headline can move billions in minutes. Monday, today, the Treasury auctions are the first move. Watch the bid to cover ratio. That's how much appetite the world has for buying US government debt. If demand comes in weak, yields spike, and risk assets, crypto included, feel the pressure. Wednesday is the big one, CPI day. That's Consumer Price Index, the market's main gauge for inflation. Traders are already betting we'll see a big reaction, with options markets pricing in as much as a 3% swing in asset prices up or down. If inflation comes in hotter than expected, you could see a fast sell-off across the board. If it surprises to the downside, risk assets like crypto could rip even higher. Bottom line, one CPI surprise and whatever trading plan you had at the start of the week could be thrown out by lunchtime. Thursday morning, we get jobless claims and PPI. That's producer price inflation data. These numbers might not always make headlines, but in a market this sensitive, they can spark a chain reaction. If jobless claims come in high, it signals trouble for the job market. If PPI runs hot, it means inflation could be picking up again. Either one can shake market confidence fast, especially when everyone's already nervous about interest rates and the economy slowing down. So the question is, what is the smart play in this kind of environment? Look, I'm not here to give you financial advice. I study what the best in the game are doing. And what I notice, they're not out there chasing every candle. They're watching for the right volatility pockets, picking their spots, and most importantly, keeping some dry powder when the market shows its hand. Don't get baited into every headline move. Focus on the signals that really matter. And if you want to know which signals matter most, just look at who's leading the market. Let me leave you today with a mental model that I use every single week. no matter what I'm trading. Right now, in the S&P 500, the Magnificent Seven, that's Apple, Microsoft, Google, Amazon, Meta, Tesla, and NVIDIA, they've delivered 40% of the entire index's return this year. 40%. And the other 493 stocks, well, they've been flatlined. As money gets scarce and confidence fades, capital flows straight into the heavyweights, the assets everyone trusts most, because this is how you survive and thrive in markets like this. Betting on strength is how you win. The rest, their time will come, but not today. Crypto is playing out the exact same way. The majors, Bitcoin, Ethereum, Solana, and SUI, they're soaking up the flows. That's where capital flows when things get uncertain. The rest of the market will get its day, but only after the leaders have had their run. So with everything we've walked through today, the giant inflows into treasuries, Bitcoin dominance, leverage across the board, getting flushed while sector rotations slow down, it's more clear than ever. Betting on strength is how you stay alive in this game. Don't wait for the crowd. Use the data. Stay sharp, my friends, and you'll always be a step ahead of the herd. If CPI shocks or that Bitcoin reserve bill in Congress starts making headlines, you know I'll be breaking it down for you in real time with no filter. So do yourself a favor if you're not already subscribed, hit that subscribe button and the bell notification so you can turn on your alerts and stay one step ahead of the headlines instead of getting blinded by them. And guys, do me a favor, destroy that like button if you got value from today's video. So bet on strength, stay sharp, stack sats, and I'll see you right here for the next episode. Early, prepared, and always a step ahead.